5 minutes and counting, guys. 5 minutes and counting. Hope everybody's having a good morning. All right, good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange, 9:30 a.m. on this Thursday. This is a Thursday, November 3rd. I'm sorry, Thursday, November 3rd, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so we had Fed meeting yesterday, right? Markets. It sold off afterwards, okay? And so we were looking for, we were looking for signs to get into some trades, and our triggers just didn't happen. So yesterday I went over an FEZ trade that could have been potentially gotten into, but we couldn't get into it, well, based on our rules. After the announcement, the dollar just shot up, and actually we're seeing continuation of that today. The dollar is up by a lot, 1.6% today. It did close over the 18-day moving average yesterday, and then it just really shot up. Okay, will it make a higher high? Who knows? I don't know. But we do know that on the daily chart, it did make a lower low. Right now, it is attempting to make a lower high. Could it be a higher high? That would be an interesting. If the dollar made a higher high, that would probably, I can see the S&P 500 seeing some new lows if the dollar gets to new highs. Okay, we might be seeing fresh lows on the S&P 500. Okay, the British pound dropped yesterday as well too, and also the euro dropped as well. And so because euro dropped, the British pound dropped, the dollar rose, I couldn't get into the FEZ trade, so I sat out. I just added some to my UVXY lottos. I do have some UVXY lottos. I added just a little bit more to it. I think in the December contract, the 7 puts. Hold on, let me show you guys. Yeah, it's the 7 puts that I'm in for December. I added just a little bit of this to it. A lotto, I just use a small percentage of some previous profits from previous trades. If it goes to zero, so be it. No biggie. I have until December. I'll let it ride. We'll see. We'll see what happens. Okay. The real move, the quote unquote real move, may not happen until Monday. So sometimes you don't see the full reaction of a FOMC until like a couple days later. All right. Most people are not. Most traders around the world have already closed for business by the time the FOMC announcement comes out. So sometimes there is a little bit of a delayed reaction. We'll see what happens. Right now, though, the dollar is up. Let's take a look at also. We saw the Fed funds probabilities also shift a little bit as well. Not for necessarily December, although it does look like now the odds are a little bit more in favor of a 75 basis point rate hike. Yesterday, it was more in favor of a 50 basis point rate hike for December. But the biggest change that I noticed is that the top rate, the highest rate in 2023, instead of 500 to 525, it shifted over just a little bit to 525, 550 by May. So it looks like the market is now pricing in even higher rate hikes for the beginning of 2023. I know the media is fixated on this. Oh, well, he's going to make the Fed is going to raise rates on a more gradual basis, but leave interest rates high for longer. I mean, that was kind of what the expectation was from the bond market to begin with. If anything, now the bond market is pricing in faster rate hikes in 2023. So I don't know why the media, is fixated on this gradual, but we're gonna keep those interest rates higher for longer. I don't know why that was such a surprise. I mean, Fed funds probability said that we're going to stay at that high 4s, low 5s for pretty much all of 2023. Now the odds have shifted that we're going to go up just a little bit more in the first half of 2023. So if anything, with their narrative, that was something that I think the bond market had already priced in. Now we're pricing in higher rate hikes in 2023. So keep that in mind. So the bond market is shifting just a bit. Speaking of the bond market, let's actually take a look at, oh wow, HYG's just gapped down. That's interesting to see what our junk bonds ADL is going to say. But anyway, TIP TLT is oh, I thought it was going to gap up, but it didn't. It didn't gap up. I really thought this was going to gap up because TNX is gapped up here. So as long as TNX keeps rising in this uptrend, that's going to put a lot of headwind for tech stocks. Okay, tech stocks are just not going to do well when the TNXs just keep going up like this. All right, so our growth versus value chart, yeah, see, it still keeps going down. It's actually going down even more now. Again, it's just because when the TNX keeps going up, it's going to suppress valuations and multiples. And growth stocks are just going to get hit harder just because their multiples are higher. So we're seeing value stocks really outperforming growth stocks. Okay. So that is still continuing. So if one is to go long, I mean, I wouldn't go long in this market. I'm still very, just being patient. If one is to go long though, I would think that going long on growth, going long on value would probably be your best bet if you're trying to play like, counter trend reactions. The big picture here is the trend is still down. I keep repeating myself all the time, but I think it's worth repeating. The overall main trend is still down. Okay. We did have a chance at a bear market rally. Our liquidity indicators were telling us that maybe this bear market rally could have a little bit of legs. It was flattening out. All of our liquidity indicators were flattening out. For example, our New York high-low line, was flattening out. And then it started accelerating again to the downside. Our junk bonds ADL yesterday, it did go down, but not by much. Okay, so I'm really curious as to see how much of a decline there is today in the junk bonds market. And I think that's going to be very telling on what's going to happen. And again, the reason why we don't call a Moab the mother of all buy the dips just because there's like 4 or 5 positives in a row is precisely that reason. We want to see a higher high and a higher low on the corporate junk bonds ADL line before we start buying assets. Play little swings here and there, okay, and keep position sizes really small. That's fine, but for real big buying of the dip, we need this line to really curve up and get over our June and July highs right here, the local highs right here, okay? If it can curve up and get above that and then make another higher low, then yes, that would be the sign to start buying the dips and stability ahead in the markets. Until that signal, no, we're still probably going to maintain that downtrend. And if the dollar keeps going up, we're probably going to see fresh new lows. Who knows though? Who knows? Okay. I'm just going to take it one day at a time. I'm not going to assume anything. My plan still hasn't changed. If we get to 41.25, which I don't think we're going to get to, but if we get there, I short. if VIX gets to 32, all right, if VIX gets to 32, I'm gonna sell in the money or at the money puts on SPY for about a month out for assignment. And then if we get to our lower valuation levels, if we get to our lower valuation levels here around 345 or so, that's where I'm going to buy shares outright for a long-term hold. Okay, so my plans for SPX and SPY still really haven't changed. Okay, nothing really has changed. These, everybody thinks that, oh, just because we have these binary events, everything is going to change. No, it's not. Okay, nothing changes that much on a day-by-day basis. No one day is that important. That's how trading should be. A lot of people like to sensationalize it, but it's really a lot of waiting. Okay, Jesse Livermore said it the best. It's about 80 or 90% just waiting, sitting around. A trader who does not know how to wait is one that is doomed to fail. Okay, most of trading is just waiting and watching. All right, and really making sure that the trade that you take has your reward to risk ratio. All right, and really just managing risk. Okay, so there's that. All right, one indicator though that I want to share with you guys. I've been studying this, and you know what? I think now it's time to present it. I was just studying this because of some data that I was looking at, and I think this is a very good short to midterm indicator. This is the third month, the VIX forward 3 months ahead. So not the front month. Okay, that's VX1, right? That's the VIX Futures 1. So on TradingView, VX1. And then VX2 is the month after that. VX3 is 3 months, right? So that would be January. Right now it would be the VX3 would be the January VIX Futures minus the front month. And right now, if you actually chart that, whenever you start seeing a downtrend, that's usually when there's a lot of weakness in equities. And when you see it going in an uptrend, there's some strength in the markets. I mean, it's obviously so, right? I mean, if you were in VIX futures as in contango, generally that's usually a more stable, uptrending market. But I find that this is actually pretty accurate. I mean, we already saw it topping out on Monday, and the markets kind of did the same thing, Let's take a look at S&P 500. Yeah, on Monday, this VX3 minus VX1 was already showing us that it was on a downtrend here, and that's kind of like a lie detector. Nothing tells the future, okay? There's no indicator on this planet that can tell you what's going to happen in the future, okay? That's just not how most indicators work. This, however, is a lie detector test, though. On every rally, even on Tuesday when we saw a rally, we didn't change the direction of this downtrend on the VX3 minus VX1. So I think this is actually working quite well in this market. All right, I'm going to do a little bit more studying on this and see if there are any studies on this. I'm sure there are. There's a lot of studies on the VIX and the VIX futures term structure, all the way going back to about 20 years ago or so. So I'm going to still do a little bit of digging, do a little bit more research on why this may be working. But I think this is a good signal for us, especially for you day traders and short-term swing traders. This may be useful. So I might use this a little bit more now in my decision-making matrix for short-term swing trades. So right now that's VX3 minus VX1. So that would be, right now that would be the January VIX futures contract minus the front month. And so it's 3 months out minus the front month. Okay, so VX3 minus VX1. I don't know if TradingView allows you to do VX3, but you can always just look at the term structure and Don't do the front month. Don't do the month after that, but the one after that one. Okay. So front month, the next month, the month after that month minus the front month. Okay. So that one is trending down. If that starts trending up, and we see that the market also trends up after that, that's a good sign that this is a pretty good indicator then, all right? But just to keep something on your radar, all right? The chart of the week, of the day, whatever, is still TNX, but also dollar. I mean, the dollar is just on a rampage. Look at that. As long as this is going up, it's risk. It's going to be risk off. The VIX is not really making that big of an outsized move. You know, surprisingly, the VIX is not really going up all that much. And I suspect that is because we're probably going back to dash for cash. Okay, look at our ZF futures, our 5-year futures. It's going back to that dash for cash level. I mean, dash for cash is basically anything under this. It is going down. So as long as the 5-year yield and a 2-year yield, oh my God, look at that. Look at what happened here. I don't know if that's a mistake or what is that, but if this keeps going up like this, again, for fund managers, they just don't want to be fired, right? Why would they risk it and put money into a risk asset if they could just park some of their money into a 2-year Treasury bond, get 4.7%? Oh my God, 4.7%, which is more than half of what their yearly quota is, and keep their jobs, right? There's, you know, that's what Wall Street and fund management is all about. It's about not getting fired, okay? It's not about beating the other guy. It's about not getting fired, okay? So all fund managers want to do is just keep their jobs and keep that gravy train rolling, right? And keep that fat salary and the bonuses coming in. So, you know, in that mindset, again, why go risk on when that 2-year yield is 4.7%? You can get half your quota and not get fired. So again, this keeps trending up. US 5-year, this keeps trending up. For those of you not on TradingView, you can also just look at your 5-year Treasury bond. If that just keeps going down, all right, that's dash for cash, all right? And we're seeing the effects of dash for cash with the dollar going up like this, all right? So there's that. In other central bank news, Japan, surprisingly, is on the news. Their central bank is in the news. So the Governor Kuroda, who is part of the Bank of Japan, is hinting at tweaking the ultra-low interest rate environment in Japan. Okay, there were some rumors that they may have to change this ultra-low interest rate environment. So they didn't really necessarily say they're going to raise interest rates, but that they're going to have to make some changes. I don't know what changes that will be. Does that mean they're going to do less bond buying? Is it no more infinite bond buying anymore? I don't know. I don't know what that means. But they did hint that they are going to look at some policy changes in Japan. And so right for now, the market really didn't really believe it. It didn't really do much to the yen. Maybe it's because of the Fed announcement, maybe the effects of the Fed. Not really sure. But that's Japan. So if we start seeing Japan start tightening, that could be an impetus for the Japanese yen to go up. I'm not going to touch this. I'm just not going to touch this. This is just not something that I want to trade. I don't want to hold this and be holding a bag and waiting for a central bank to do something. That just doesn't seem like a good trade to me. So I'm now abandoning the Japanese yen trade. I never got into it to begin with. And this is definitely an example of JOMO, the joy of missing out. I'm definitely happy that I missed out on this and that I never got involved in this to begin with. Yes, would we have made a little bit of money? Yes. But the stress of this candle right here, that would have been really stressful. That would have taken a lot of my mental capital. And just this it would have ended up being just a heartache. Lots of profit, giving back some, lots of profit, giving back some. And yes, we would have made a little bit of money, but it would have been a roller coaster ride. I would have been a mental wreck. I am so glad. I am very glad that I missed out on this trade. So there you go. Okay, just because it's a winning trade doesn't mean you always take it. Sometimes your sanity is more important. My sanity is too important for this. I am not taking the Japanese yen trade. I'm definitely taking that off of my trade plan. Okay. So I wanted to let you guys know about that. Let's actually take a look at some of our stocks and other plans. Yeah, so FEZ, wow, what a shame. I remember a couple days ago on Discord, I was like, oh, man, I really want to short the Euro Stoxx. And I should have when I felt that, look at this. That would have been a great move. Shoulda, woulda, coulda. But, you know, the odds were way more stacked in our favor if we had waited. But that's the price you pay for looking for the best trades. You end up missing out a lot. I end up missing out on a lot of trades because of my stubbornness at waiting for those juicy levels. But when we do wait for that, though, those trades work exceptionally well. However, you do end up missing out on a lot. So, I mean, it's a trade-off. That's part of trading. That's just part of life. The DAX, I still would like to see the DAX at 13,800 or so before I short the Euro Stoxx index. Will we get there? Who knows? If we do, though, I have my alerts ready, and I will make a move if that happens. Speaking of move, the move index. Wow, I didn't see this. Yesterday, the move index actually went down. So, again, you know, before yesterday, I was telling you guys we were way over hedged. You know, there was a lot of hedges in the dollar and the bond market, as well as SPY, SPX. Even though the market went down, all of these volatility indicators went down too. VIX went down, MOVE went down. So hedges are coming off, the short-term hedges, and a lot of these hedges are short-term. So the short-term hedges came off, and I think I suspect that a lot of that got rolled over into further dated hedges. And actually, if you looked at yesterday's SPX options, the options chain, there were a lot of puts that were bought above, at ask or above, and especially longer dated around December or so. So I think a lot of those short-term hedges got rolled over, and that's why we saw continued selling, even though the VIX went down too. Also, too, most likely, we probably saw, you know, this is going to take a couple days to confirm, but we also probably saw a lot of institutions and a lot of retail probably sell and move into cash as well, too, judging by the way the dollar is going up and judging also by the way the short-term rates are going up as well, too. Okay, so that's probably what's going on in the markets. There's probably a lot of risk off. How long will that last? Who knows? I have no idea. Today, I think the junk bonds ADL advance or decline today is going to be very telling. Well, let's actually, and right now too, the high low is making it's making a more outsized move down. We were making smaller moves, even venturing into the positive territory on highs minus lows. This is on the New York Stock Exchange. How many stocks are making are making 52-week highs minus how many stocks are making 52-week lows? All right, and so that is coming down. So will we see these kind of candles, these big down candles? We might, and if that's the case, I can see us making or revisiting those new lows. We'll see. I'll just take it one day at a time. I don't really have that many long positions. I do have some long positions, but they're mostly in stocks. I mean, you guys know what those stocks are. Actually, let's take a look at some of them right now. UUUU, look at that. So UUUU is our uranium play. I was actually happy that the markets were taking a little bit of a breather because of my short 7 calls are finally out the money again. Oh, but it started down and now it's going back up. Why is that? I have no idea. The market is down, but UUU is up. Go figure. We'll see what happens. I think earnings is coming up pretty soon, so we'll see what happens to UUUU at that point. And then also to my PPC, Pilgrim's Pride, the shame of my portfolio. Yesterday, it actually retained a lot of its gains. Look at that. So this is a food stock, so it could behave a little bit differently than the rest of the market. We'll see. Okay, and then obviously we have the HUT shares as well too. HUT is a growth stock, of course. It's not going to do well when everything is selling off. Oh, we do have earnings. Oh, we had earnings today. We had earnings today. Huh. Okay. So I didn't even know we had earnings today. I'll take a look at the earnings and I'll report to you guys what's going on with HUT. With the miners, there's really not that much of a change on a ER, just because their production numbers, they usually release their production numbers every month. So there's really not that many surprises that happen during a earnings call. But I'll get on that call or listen to the transcript, and I'll tell you guys what's going on. If anything, if there's anything to report. I suspect it's just business as usual for these miners. As long as growth is getting hit, as long as cryptos are going down, miners will go down. They're very correlated to the crypto market, obviously, but also too, it's very correlated to the small cap index. Small cap index also taking a big hit today as well too. Okay. Speaking of crypto, let's take a look at that. We still have that high gamma zone as 1600 right now. ETH is at 1526 or so. We still have that high gamma point at 1600. We got a low gamma point here at 1550. So is it possible that if we lose 1550 that, you know, that this selling begets more selling? It could, or it could drift. If it drifts higher, it could go back and pin to 1600 again. We'll see. A lot of the 1600 positive gamma is not just for this week, but also next week, the weeks after, and all the way into December as well. All right. Most of it is in November, though, all the way to the end of November. So we'll see if that affects the ETH market. I'm actually surprised. I'm actually kind of curious to see how OI has changed. So we're still at about 7.2 billion. So it really didn't affect open interest all that much. It looks like. So that's good. Well, I mean, at least if you're, if you're trading based on options data, that's good, because now options data, it still has that pull on the Ethereum price. But as far as any big changes, I don't see that many big changes. Oh, I do see a big change in the 1500 strike on puts. So it looks like there's some put trades happening. I mean, rightfully so. A lot of people are probably hedging if they're seeing this big, down movement in risk assets. It's only natural that they're going to want to hedge and buy some puts. So as you can see here, regular trade breakdown. It looks like puts are now in the lead. Usually it was calls. Remember, calls were the lion's share of this pie chart. Now it's puts. Okay, puts. All right. Even block trades, puts bought. Okay, so that is where we're seeing a lot of the action. Let's see if there's dare a bit, shame. Good. All right, it does that. I don't know why, but whenever the New York Stock Exchange opens, the Deribit sometimes gets a little bit slow, or sometimes glitches out like that. Probably just because of increased traffic. Oh, look at that. June 23rd, 1,500 calls. Somebody sold that for $1 million. Was that part of a spread? It looks like it was part of a spread. Buy 1,500 calls, but sell. Buy the November, but sell the June. That's interesting. So long-term volatility they think is going to go down, but short-term rise might happen. That's very interesting. I don't know if there's other parts to that spread as well too. 917.19. 917. Look at the look at the block trades. Remember how for like a couple of weeks after the merge, we didn't see any trades over like 50,000 nominal value. Now look, we're seeing all these trades for 6 figures. I mean, 6 figures is not really all that much, but we're starting to see increased block trades at least. So increased participation. 917.19, 917.19. Is there any other for 917.19? I don't see anything else for 917.19. Yeah, I don't see anything else. But yeah, 917.19, it looks like there is almost like a reverse calendar spread. Usually with a calendar spread, you see the closer dated being sold and that IV getting harvested to pay for a longer term position. But this is the opposite of that. So somebody expects big movements now and then not so big movements later on. That's pretty interesting. Maybe it's part of a bigger spread. You don't know. They could have some other positions in their portfolio, and maybe this is a closing order, or maybe this is to supplement another position, perhaps hedge another options position. It could be that too. So as far as positioning is concerned, you can't really say much about what the actual positioning is of this individual trader or institution. But, oh, look at this trade too, 953.34. Buying the November puts and selling a March call. Okay, so bearish trades. All right. Lots of put buying. Some put buying here, 1304.08. So this is buying of a put and a buying of a call. So that's more of a strangle trade. So a long on volatility. So okay. So yeah, we're seeing we're seeing people prepare for volatility. We're seeing people hedge. So that is at least what market participants are doing in the ETH market as well too. Okay. Anything else you guys want to look at? Going once. Going twice. Okay, well, in that case, that concludes today's morning market memo. Our Discord link is down in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees. There's no paywall. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, guys. I'm trying to finish that Theta Thunder video. It's almost done. I've back tested all this data and all the way back to 2009. So hopefully this weekend I'll be able to finish that. It's going to be a good one. It's a trade that I've never lost money on since 2017. I think you guys will learn something from it. So stay tuned. Hopefully this weekend it will be done. I will see you guys next week, Tuesday, Wednesday, Thursday. As always, 9:30 a.m. Eastern Time, market open, market memo. That's when I'll see you. Have a great day. Oof. What a day, guys. What a day. By the way, MSC, that was a good visual that you put on Discord. The real interest rate, that's a good one. That's a really nice visual. If you want to download it though, you gotta pay $20. That's crazy. Okay, but it's still a nice chart from 1972. It's pretty good. Pretty good. Actually goes even further back from 1972. Wow, it goes all the way to 1870.